Here we are once again, cash flow mastery week 2. Welcome everybody. Glad to have you here again with me for week number 2. So last week we started talking about the core strategy, and the core strategy is selling to open a put. All right, obligates us to buy the stock if the buyer exercises his or her right. There is a premium you get for this obligation. All right. And it is an obligation, which means you are obligated in the event that the buyer decides they want to exercise. That's the risk. The reward is the premium you get paid to take on the obligation. It's much like an insurance company. That's the best way I can explain it. It's much like an insurance company that it will insure a home for damage, for property damage. Or insurance companies that insure for liability, or even life insurance. Okay. The insurance seller is very similar to a put option seller. They're taking premium in. They also know they have a high probability of going to keep that premium. And now what do they do that we may or may not do? They rinse and repeat that strategy. They're sending out and collecting premiums on an annual, quarterly, maybe even monthly basis, depending on how the buyer has set up that insurance policy. And we can do the same thing too. I did it last week utilizing an example using SPY. And then what we did was we went back and back tested that SPY strategy, which was under the symbol PUT. So we could actually go back and see how well it worked. But what we learned in the end is that if you're willing to do a little bit of work, okay, and you're willing to do some things that other people just don't do, and I've done a lot of the legwork for you with the scans that we have, we're able to put in front of you, front and center, stocks that have an above average return for selling that premium. Now, they also may come with above average risk too, because if you're selling an option premium like we did this week, okay, I'm going to be going in and looking at SOXL. That was a trade that we put out yesterday, just not long after the market opened, about an hour after the market opened, and we got much better than the limit we were looking for on that particular trade, on those trades we did. So I'm going to go back and we're going to look at that. But I want to look at that. And I want to look at that as an example. I want to look at that in terms of you being a cash secured put trader, or whether you are a margin put trader, or maybe you're an unsecured put trader. I want to show you all those variables, all those differences between 1 and 2. But the big thing that I hammer home about this, and I do talk about this quite often with our alert service, is that this is a great time, and the times we're looking into right now, the amount of nervousness that ran through the market the last couple of days, and then of course what's happened, we've got a little bit of respite, if you will, a little bit of reprieve from all the noise that happened over the weekend. And I call it noise, but if you live on the other side of the world, obviously it's much more than noise. But living here, we look at that opportunity. We look at that opportunity. We look at whatever causes noise to create opportunity for us. And so that's why I say these are incredible times, and look at this as a long-term wealth building strategy. All right. So last week, and I'm fast forwarding, I'm not going to go through the details. I just want to do a review, and I want to expand on that review. So last week, we looked at rocket companies as a trade. And there were a couple of things we were looking at here. Stock was up more than 47% in the last 3 months, right? So we saw that, when we were diving into this trade. The initial projections I was looking for was to get paid $1,000, all right, to buy. Now that was $1,000 to buy 1,000 shares of Rocket, but that's how I set it up. My initial projections are we're buying Rocket. We're getting paid $1,000 to buy Rocket, 18% below the market price, right? So if we were to look at Rocket at $15 a share, return to its previous levels of 20, we would have had a $5,000 profit in the stock, plus we'd have $1,000 from the original payout. This was the beginning piece when we were putting all of this together. But then it actually ended up getting a little bit better, because when we looked at this, the December 12 puts were actually trading around 29 cents. And you might say, well, 29 cents isn't a lot of money. But when you look at the number 12, okay, and you look at 12, and you look at like 29, let's call it 30 cents in there. That is a long way from where it was at the beginning of the year. That put us well into a buy zone where we were looking at selling this particular product. And then we looked at placing the order on Rocket. We're using December 19th, 2025. Okay. At the time, it had 116 days to expiration, so a little bit more than the 90-day that we look at. But again, those are just rules. They're not, or they're a range. We can go outside that range. We can go inside the range. Sometimes we do. I remember last year we placed an order on VIX, on one of the VIX products, and I think it was a 2-week trade. Actually ended up being a 1-week trade on a 2-week option, because it was looking so good. So we went inside the 30 days because that one looked extremely lucrative, and it was. But here it is. We ended up with 30 cents on this particular 12 put. So the 12 put ended up being a value of 30 cents. So how do you place that order? You sell to open. That's what we look to do. We look to sell to open these puts, because when you sell something to open, in order to close it, you would buy it back. Or in the case of many short puts, you know, we unlike the person that's long that long put trader wants that premium to rise. We want it to fall. And if it falls down to zero, we don't have to buy it back. We can just let it expire worthless. So there are 3 levels of put selling, okay? And you've got cash secured put selling, which requires the cash to purchase the stock at the strike price. Now that's what's called level 1 clearance, all right? If you're trading stocks, if you're already buying Rocket or whatever that stock is, and instead you want to give yourself a payment to buy it at a lower price, you already have that money in your account and you've already signed up and gotten level 1 clearance, then you are clear for what's called cash secured put selling. Now, margin secured put selling would mean you'd have to have a margin account, okay? But that would require only 50% of the strike price, which is level 1 clearance with a margin account. Now, it doesn't work for all brokers, but I'm giving you the average broker, okay? And then, of course, there's the one that not that many people do, and that is unsecured, all right? You know, I'm clear for unsecured, but there are some people that do this. And so what are the benefits of unsecured? Well, you really get a cut rate on the amount of money you have to have required to sell. Now, you know, usually it's about 20% of the strike price. So what you're doing is you're getting leverage of, instead of 2-to-1, like a margin account, you're getting 5-to-1 leverage, right? You're required 1/5 of that price of that stock. And sometimes they'll even take the credit received as part of the 1/5, lowers it even more. Where people get into trouble with this is, instead of buying the cash secured using that unsecured area, they'll level up 5 times. And to me, I don't think that's the right thing to do. I think if you have unsecured put selling, it gives you the ability to have 5 different opportunities around that same price point. Okay, so now you're not going leveraging 5x on one security. You're doing 5x across a variety of securities. That's where I think it may make sense when you get really good at and you understand this particular strategy. That's where unsecured put selling may make sense for you. Where I think it absolutely doesn't make sense is levering 5 up on one trade. Because what if that one trade, doesn't matter how much probability profit you have, what if that one trade was like the one I'm losing on this year? which is TTD. TTD, I'm going to show you the TTD at the end of the session. And it's a trade I took in, I think, $1.30 for, and now it's worth $5. Okay, it's somewhere around $5, maybe a little less today with the bounce, but it's now going for $5. So if I paid $1.30, then that thing is 4x against me. It's a little bit less than 4x against me. And if it stays that way in the next couple of weeks, then I got to do something. And we'll get to that. I want to talk about that toward the end of our session today. But keep in mind, people ask, well, what should I do? To me, if you've never gone swimming before, what's the first thing you do? You put your toes in the water first. You get a temperature check. All right. Then you might put your knees in or your waist in. The last thing that you do, if you've never swam in water before, is dive in head first without a floaty. Okay. So you start with cash secured and you work your way down. If you really feel comfortable with it, then you may decide to get into the unsecured put selling area. So if we take a look at the Rocket Mortgage again apply real numbers to it. Now this was using the $12 put, which we actually did one. We did that last week. And we used a $12 put, I believe. We may have gotten a different amount for it. I think we got $35 for it. But so this is, I may have ran a couple of things in here. Yeah, I see a little problem here. I'm gonna fix that on the fly because I reset that just when we were talking. So what we were looking at here was those initial projections, and then if we are using today or last week's trade, it looks like that. Okay. So cash secured put selling looks like this. For 100 shares of Rocket Mortgage, if we sold the puts and we sold the puts with the $12 strike, we collected $35 for that. I know that one of those contracts is good for 100 shares of stock. So what's 100 times 12? $1,200. Got to come up with $1,200 right off the bat and have that in my cash secured put account in the event that Rocket Mortgage runs out of rocket fuel and comes down and hits the $12 level or below. I'm getting 35 cents for that, which is $35. All right. Minus that from 1,200 means that I really have to come up with $1,165 for that position. Okay. So $1,165. So what are you getting on this? So you're getting you're getting a little over 3%. All right. On the cash secured put side. 3%. Again, 3% on what? All right. 3% on a trade that, what did we use? The April or the May? I'm trying to remember which one we actually went into. Let me bring it up real quick. I have this stuff all set up to go in order for our class today, but I'm going to bring up another page just so that I have this in front of me. Now we did this. If you're looking for that trade, you're going to go into trade list in your Gulfport site, and you're going to go look for trades in the cash flow mastery course. When you click on cash flow mastery course, and you look at the open positions, you'll see Rocket in there. That was a May 15th option. So I've got it in front of me here, the May 15th options. And then they were 35 cents. And then yesterday they closed, I think, or maybe they're right now are trading around 37. So they're down a little bit, down a percent. Okay, down a little bit. So, but what I'm talking about here is this is a trade that has a little bit more than 2 months to expiration. Right, so 2.5 months. So you're getting 3% in a little more than 2 months. On an annualized basis, that well outpaces. So when you look at the SPY example I gave you last week. All right, look at what it generates. All right, so what did it generate? I believe last year SPY was 17%. I believe that this particular strategy, I think it was 9.3%. So let's round up to 10%. If I can get an annualized return of better than 10%, then I've got something that's working better than the benchmark. right? So this would annualize out much better than the benchmark. But if you were margin secure selling instead, you can take that number and you're reducing your amount to come up with in half, and therefore you can take that 3% and double that, and that becomes a 6% return in 2.5 months. What about unsecured put selling? Well, you only have to come up with $205, all right, to get a $35 premium. You're holding out $205, and you can see right there that's about a 15% return on, not on risk, return on margin. Okay, 15% return on margin. So again, another reason why people look at this in those three different areas, and the way they're tracked, and I want to make sure you understand this, the way they're tracked in Gulfport, in the trade alert service in Gulfport, is under the minimum margin rules, and minimum margin rules with puts are unsecured. All right, meaning contract 20% of contract price minus premium received. So I've had that question come up before, is that, hey, I'm not getting a 15% return on this trade. How do you calculate this? Again, calculations are used, come off of what's called SPAN minimum margin requirements. All right. So our current alerts, and here they are. All I had to do was move forward an additional page, and you can see that here. Rocket Mortgage, and then we have the two USO trades. And I'm just going to talk about the first one because we're going to get into put spreads next week. I don't want to jump into that too soon. What I want to talk about is I want to talk about long puts, and or short puts. I want to talk about how to put them in, how to scan for them, and what to do if something goes wrong with them. All right, what are the adjustment strategies we can do? That's my plan for the remainder of our session today. So let's talk about positions. Okay, you've got current alerts here. I'm going to dive into each one. In order to do that, I want to move over to the positions. Let me just slide this over here. There we go. So here are our cash flow mastery trades, the three trades we have on right now. And so we're going to look at trade number 291. Because every time we put something on there, we have a trade attachment to it. And then this one is a short put. Now, when I put short puts in, we normally put them in under one contract basis. Okay, we don't take half of it off when it drops down a little bit in value, although maybe a good idea. We might look into that further, but I like to put them on in as few of these as possible. So that's how we look at these. If we're doing something that is on the buy side and we're looking for direction, which is not in this mastery course, then we'll put a minimum of 2 on so we can get out of half when it reaches a certain level, get out of the other half when it hits our ultimate target. But for short puts and short put credit spreads we get into next week, we do it on a minimum contract basis. All right, so I got USO up here, and immediately what I'm seeing is, if you remember, during our time together, I'm going to open this one up. So if we click on it, it actually opens up the original trade. So what did we do with USO? We were looking at USO. This was a 5-month trade, and 5 months, you might say, well, Tom, why didn't you buy the calls? Tom, why didn't you do a call spread? And we could have done a call spread, but remember, premiums were at near 1-year highs on USO, and they probably been even higher in the last week. So what we looked at here was the ability to sell that high premium. So we sold the July 17th 70 puts. Now, when I want to go in and look at the entry on these, right? Let's bring up the entry on this, and then you'll see the information I put together that particular day in class. We had the July 70 puts. They were selling for 4 points, $400. Okay, so that gave us well, actually we were priced at $398, but we put a even number 4 in there, and that's what ended up happening. And so in this case, what were we looking at doing? We were looking at that 70 put for $4. Sell to open US July 17, 70 puts for 4 or better. Break even 66 or an 18% discount. That's what we looked at on the puts. All right. So in this case, we've opened that trade up. Now, on an unsecured cash side, that was much, much less. We know that, right? So, when you look at the information over here, when you're looking at any of this, realize this is based on the unsecured capital. But down here, this is correct. This is going to be correct right here, right? So $167 unrealized is based off of the $400 amount that put was going for at that entry, which means that puts trading somewhere around $3.33 as of, you just take take 400 minus 167 and you know what that trade's selling for at that time. Let's dig in. Let's see what it's exactly selling for. So I'm going to pop over here. We're going to look at Trade Desk later, USO. And I'm going to just look at the real-time price. Okay, here we are. It's up. It's been up much higher. I mean, last night we were at 93. We came all the way down into the 89s. We're back up to 91 right now. If you take a look at the options on USO, let's look at the options. And again, what am I looking at? I'm looking at selling puts, July expiration, July 17. All right, which ones did we sell? We sold the 70s. Let's go look at the 70s. Got to go down a ways to get to the 70s. There's the 70s. Look at that price. It is even much better. You know why? You know why this price is down from $3.30 yesterday to $2.29 today? It's not because oil's up a whole lot. It's because volatility has crashed. It is crashing. We were definitely right on this. Okay, we were definitely right on this because now, oil's gone up a bit. Of course it has. But the thing is that coming into the beginning of the week, it could have came down just as fast. But it's leveling out up a little bit. And those July puts, which were extremely expensive when we put them on, are almost, 29 cents away, but they're almost half the price. Amazing. In just a couple weeks. So there we go. I have to say this though: if USO gets to 100, which was my target, with all the stuff going on, is if USO climbs to 100, and this is down at or below the $2 mark, we may just take that, take a knee, take that off, and move on. That's an exit strategy when a target happens, and if the target happens, and we got March, April, May, June, July, or let's say April, May, June, July. We still have 4 months to go in the trade. Why not take 50% of what you can get and 80% of time value left over? Take that all off the table. That's an absolutely acceptable way of moving out of this, taking the W on the put seasonal and maybe even take that money if volatility's come down, what you made, and rotate it into a call spread. It's an idea. It's an idea. All right. So that's USO. Let's look at the next one. The next one we were talking about was, and in this case, if I'm anywhere on my looking at my alerts, just the back button will take you right back again to where you were. So let's look at Rocket, because Rocket's down a little bit. So I want to look at that. And maybe it could be down because of last night. We'll see. So as you can see here, here's the entry. Here's a couple comments we put in the day after. But obviously, if you see, Rocket went up, and then Rocket came down Monday, Tuesday. It went from being a profitable position to being a now slight loser, and that's why that chart's there. That chart is there to show you what the options are doing, the option trade or the option spread, depending on what we're looking at here. Right, but if you go here to the overall entry, you can see all the information. All right, selling that $12 put, bringing in 35 cents or $35 per contract. And then there's the image that came with it. And then I just put in cash flow mastery trade number 1. We did live in class together. Now, if I want to look at the real-time price, I want to look at the real-time price of anything. I'm going to my broker to look at the real-time price. So I'm going to look at RKT. And remember, this is the May options. So depending on who you use as a broker, RKT, there's Rocket Companies. What's Rocket Companies doing today? Come all the way to the top. You can see Rocket Companies is slightly down, $16.41. Well, what's it done in the last week? It was as high as 1960. It's gone from 1960 on Friday. That's what at Friday I made that comment. Hey, this is looking pretty good. I must have did it right before the market closed, because from Friday to March 3rd, yesterday, we dropped from the stock dropped from, it went from being up 10% to being down 11%. It had a 20% move in 3 days. Now it's leveled out a little bit. Let's see what those options are going for. All right, so what did we sell? We sold the May puts. The May 15 $12 puts. 33 cents. So they are actually slightly profitable again. All right. And again, all we're doing here is just going back and forth and taking a look at the positions as we see them within the cash flow mastery. And maybe we might add 1 or 2 of those today. All right, we might add another one today. Depends on what we find, or maybe not. It depends on, again, what we find, and then is that tradable right now? All right, and we're going to get to that. So that is that wraps up the cash flow mastery positions we have open. For cash flow trader, I have positions that are open as well, and I'm going to get to those here momentarily. So as I'm moving along here, let's get into the tools, and let's talk about first what I've done before and how it's relevant with the new hub and Tom's tools. So what I've done before, look at that. Somehow my on-air chat is turned off, and I apologize. Let me turn that on. So, questions, feel free to ask. I'm sorry, guys. I didn't even know that was turned off. I was wondering if anybody was listening to me, if anybody had comments, etc. You have access to the chats. All right. So, so there we go. Let's talk about my power list here, and going to using the hub tools. Hub tools are activated for you. So let's pop in using the tools. So here's what we're looking at. We have a list, and we can go through thousands of stocks. How do we drill that down to the ones that we want to look at? I'm showing you the core way to get to that list, and that's through the OCC Penny program with Google. So if you go to Google and you type in OCC Penny program, you're going to bring up something that's called the OCC Penny program from the OCC. The other way you can do it is through MIAX. All right. MIAX. I want to show you that as well. Both 2 different ways to do that. So if I I could Google Penny Pilot Program. And when I do Penny Pilot Program, right there, all options exchanges, options penny program, MIAX or MIAX, depending on how you do that. If you click on that, it's also going to give you the US options. And all you got to do is just scroll down. And when you scroll down, you'll find those MIAX options penny class lists. Okay, and then it also gives you the ones that were removed. I don't care about that. What I care about is the current list. Okay, so there's the current list, the very first one. And so if you click on that, it's going to download the CSV file for you. And so there it is. It popped in. I can click on that particular Penny Pilot classes list, and it opens into a spreadsheet. And it'll show you all of those penny class options. So that's for you. That's to show you how this is actually done. And it'll give those to you, and you can actually have them ranked. And there's about, I think, 425-ish with stocks and ETFs. Now, why do I only trade from this list? Because they're the most liquid of the optional stocks. They represent the top 1%. So if there's 4,000 optional stocks out there, and I'm doing 425, that's just over 1% of the list of stocks. It's also the top 10% of those that trade options. Okay? So they're there. The good news is that we have that now listed in Hub. So if you go to hub.com and you log in, anything we do a scan on, you're going to be able to go to stock lists, and you'll have NASDAQ, penny and weekly. All right. And then there's penny plus weekly. Now, penny and weekly are stock optional stocks. All right. They're stock options or optional stocks that are both in the penny pilot that have weekly options. Okay. So penny and weekly are a smaller list than penny plus weekly. Penny plus weekly are penny pilot options of stocks and stocks that have weekly options. And we put those on top. So you have that. Now, US optionals is going to be the big list. That's everything. But then you also have the S&P 100, the S&P 500. And then what we're adding in soon are quotable lists. And this is going to be becoming the ability to customize your own list. Right? I already tried it, and I put in my 1%ers list. And a 1%ers list is the top 40 stocks that are by volume. That's what the majority of people are trading, those top 1%. So we're going to play around with those in our lists. So let me back up a second. Let me show you how you find this. How do you find this list? Well, you have to be in a scan in order to do it. So if I come over to my Hub scanner, right, and I go to the option scan, doesn't matter where you are. Okay, if you're right here, when you log in, this is where you're going to be. And if you come up here and you click on the scanner button, that's going to take you to our scans. Now, again, you have to be in this class, or you have to be a partner. You have to be a master student, or you have to be a partner in order to get this scan. This isn't available to everybody. It is now available to you. And so if you look here, I get optimal call put. I've got 24 earnings. I've got sell puts. I got money counter trader. I got optimal breakout, optimal red wave, and a new one we just added was calendar trapper this week. But we're in the sell put scan. That's what we're doing here. So if I click into the sell put scan, immediately the first thing I want to draw your attention to is right here, stock lists. And if you bring up stock lists, you're going to see everything I just showed you. And down here, you'll see my 1%ers as my quote list. Right? So that's my quote list. Now, there might be a way. I'm going to play around with this, but there might be a way to do that to create your own quote list very quickly. Okay. I'm going to play around with it. I don't want to do it in class because I don't want to take up time. But I'm just thinking in my head, I might have a way to show you how to do that next week without Hub having to do any kind of programming. I think I might have figured it out in my head. Right. So don't hold me to it, but that's a one I want to look at. Okay. John, there is no weekly only list. There's penny and weekly, and then there's penny plus weekly. Right. So when I bring the scan results up, they should, and this is set up already by default. When you click on the scans, you should immediately start seeing the scans that come in place, and we're gonna play around with those here shortly. But I wanted to share with you the stock list piece at the very first. So I have my stock lists, and by the way, if you, like I said, I can, at any scan, I'm going to get a number of different scans depending on how much stuff hits the scanner. But if I take a stock list and I drill it down, let me just look at my 1%ers. Well, wow, I'm really amazed at the amount of trades I have that are on the 1%er list, because 1%er is only 40 stocks. So I have to go back and look at that and see if that indeed is correct. All right. But yeah, so, we it starts out with US optionables because that's taking every optionable stock and running any scan against it. All right. Now we'll come back to this sell put scan here in just a few minutes. What I want to do now is I want to go to charts. We're going to go from charts to options to scan. So let's start with charts. And the chart feature is how we add the probability cones and create what I call the buy zone, right? For part of what we look at here for cash flow trades. So to do that, let's take the position that we did on Monday in cash flow, which was SOXL. All right, so to do that, I'm going to go and I'm going to click on my chart tool right here. Click on the chart tool. And then what's going to happen is the last symbol that you were dealing with prior to moving out of the software should come up. So I put in SOXL, which is the Direction Semiconductor Bull 3X ETF. Again, to me, I look at these as an exception, not a rule. I trade one or two of these a year. This one was a doozy from what it did. It was also a really good trade in February too. So you saw it go from the point that I'm gonna bring this out. So clicking on the plus key down here will bring this out more. But you can see what happened with this one in a period of a week and a half. Stock went from 72.50 down into below $50, and then went right back up. And here we are at 72.50 again, and 1, 2, 3, 4 days later, back down near just above 50, and then here we are today. So how do I put the cones on? All right, well, you would go into, if you expand this area right here, there's a little arrow right below the big H. If you expand that, it actually brings the words out, not just the icons. And I'm going to look for studies or tools, either one of them. All right. Tools and studies are in the same area. So if I can go to studies by just clicking on the studies tab. I can go to tools by clicking on the tools tab. On the tools tab, all right, I've got a couple of things marked, and you'll see tools that I like, I will hit with a star. And then that becomes a favorite. It actually shows up over here, so I don't have to go looking for them all the time. But under the studies area, you will see volatility as one of the studies. If you click on volatility, then you're going to see some of the study names in volatility. Notice I have implied volatility as a favorite, and I have volatility cone as a favorite. So volatility cone is something we're going to be using. If I click on volatility cone, notice what happened behind me here? It put something out here, put that volatility cone in place. So now I'm going to click OK. But all I have to do to toggle that on and off is if I have that VLC, that's the button right here. If I have that VLC in my favorites, just click on it. On, off. It will activate. Any of these you have on here will activate in this area. Okay. So there we go. All right. So now I'm going to reset this, and that brings back that brings me back when I hit that little reset. You've got a minus, a plus, and a little arrow, which is a reset. It'll reset the chart and give you a long-term chart. So that's what I did. Now, if I take a look at this, it's set a volatility cone for me. Now, let's just take a look at this for a moment. That volatility cone goes from now, and it projects upward, and it projects downward to a date in the future. If I click and drag the entire chart to the left, you can see where the end of that cone is. Well, I'm using a May option, and this thing ends in the middle of April. I got to add 30 days to whatever number is in this cone. So if I come up to a cone and I put my mouse right on one of the edge lines and see how the lines thicken for me, I'm going to right click on that, and it's going to bring up some settings. And I'm going to click on volatility cone settings. When I do that, it brings up the volatility cone settings. Now remember, my projection bars, I said I wanted to add 30 days to get myself into the middle of May. It might only be 20. It might be 20 because it's based on trading days. So I need to make that 3 a 5. So I'm going to put my and they're working on making this a little bit easier, but I got to put my mouse right past the 3, hit delete, and then let me do it again. Delete 3 times a charm. Okay. There's my 5, 52, 50. So you might have to play around with the numbers. It might be an Australian thing. But now I have under parameters. Okay, this stays at historical right now until the implieds are loaded in. Leave it at historical. It's close enough. Projection bars project from today out. I want to go 50 days out. This you leave alone. This is days per year, trading days per year. I leave close alone. I leave period alone. I leave standard deviations alone. The first standard deviation is a 1. When you go into appearance, I can have both my first standard deviation and second standard deviation checkmarked. And I also checkmark fill, because if I don't checkmark fill, then it leaves the areas blank. And it's just a visualization for me. You can checkmark that if you want. But notice when I checkmark fill, it actually fills in colors. And then my axis here, all right, my axis color is currently set to blue. I can change that color. I can make that whatever I want. If I want to make it a red color, then I can make it a red color. Any changes you do to anything in here and you want to keep them, this is your next best friend, defaults. And I want to click on defaults, and I want to click on save as defaults. It's going to say these will save your current settings as default. Do you want to continue? Yes. Then click OK, and now you're done. Now look what I did. I ended up, oh, look what I did. Now I got to go find the edge of the graph and get myself back down to a, oh, you know what? No, that didn't do it. That didn't do it. This is a zoom feature. This is not hub. This is me. All right, this is me. I've got to actually go back and reset the entire chart from scratch. Oh, I think I might have done it. Nope. You know what I got to do now? I got to start over again. I'm going to have to figure out how I fix that in my Mac, because I use the zoom feature for you, not for me. But because I use the zoom feature and I get inside that chart, and that's the only thing I see, I don't see these outer edges, I can't zoom back out. But I'm back. Let's hit the chart again. Okay, there's my SOX XL. Let's see if everything held. Click on VLC. Yeah, there's my red chart. And there it goes all the way out to May. So everything stayed the same. It stayed as I left it. Perfect. Now, the other thing I want to add in, and you'll find that also in the tools area, or is it studies? The studies area? Yeah, studies is under volatility. I look at volatility. Implied volatility is a section, and I like to check mark that one. So I'm going to click that on that. I'm going to click OK, and I got my implied volatility graph up. Now, maybe your implied volatility graph doesn't look like mine. Okay, let's fix it. So in order to fix anything that you put on a screen as an indicator or tool, you're going to move over right on top of it until it highlights, and you're going to right-click, and you're going to go into, in this case, implied volatility settings. I'm going to click on implied volatility settings, and look what I'm using. I'm using the 60-day IV. I can put both of them on the screen. It's just going to get a little bit, you put more of these on the screen, it's get a little wanky. But here's my 30-60. How about 30-60-90? How about we just pick one? We could go with a 30-day. All right, so my 30 days are in, right now they're coming up as green. Now, the other thing I'm noticing is the 30-day, mine's a thick line. You might have a very thin line. I'm going to show you how to fix that in a moment. But I'm just going to look at 30-day IV, and I'm going to look at overlaid chart. When you click on overlaid chart, it puts the IV right on top of the price chart. Again, what do we do, folks? Defaults. Save as defaults. Yes, we continue. And then before you click OK, we need to fix the coloring. So now I want to go to appearance and see what I have here for appearance. Now, if you're like the old Tom's Option Tools guy, you're like, hey, I like my 30-day IV to be red. Just click on the color scheme, and you can change it to red. Okay, change it to red, and then you might want to click on the 60. Remember the 60? I think the 60 was blue. So I can make the 60 blue. And then I believe that the 90 was black. Anything that was 90 days or greater. Remember that? That was black. So I'll make that black. So now what I did was I changed my colors of my IV30, my IV60, my IV90. IV90 plus, I believe, was black. Maybe I'm wrong. But anyway, you can change these. And then the other thing you see here, you see the 4 instead of the 1? That's the thickness. So whatever you're going to look at, and I'll just look at 30, 60, 90s myself, but whatever you're going to look at, make sure it has a 4 on it. Like it's a 1, but make it a greater number. I think 4 gives me these really thick lines. A 3 gives you a little bit thinner. Whatever your eyes feel comfortable with. And again, what's the magic word we do after we change anything? If we want to keep it, you go to defaults. You're going to save it as defaults. You're going to click yes to continue, and then you click OK, and then guess what? Now, look what I've got. Oh, I did it again. I did it again, folks. You see what I just did? Now I got nothing but chart in front of me, and there's absolutely nothing I can do. Shame on me. Let's see if this does. Ooh, look at that. Oh, look at that. I think I did it. No, I didn't. All I'm doing is going into space. All right. I saved it already, so I'm gonna just one more time. Let me log in. One more time. And let me go to charts when it comes up. One more time. I'm going to turn on my VLC. I'm going to turn on my IV, and everything's there the way I left it. Okay. So what do I see? I see SOX L at a very high IV near its 1-year high. I see volatility cone, and I see an area that I want to be a buyer on, even though it's 54. I need to be in between. I got to be outside of this middle cone. My buy zones typically are in here somewhere. So that's why when you look at the actual trades and you look at SOX XL and you see that put there, there's the trade, and look at that. There's the implied volatility cone. There's the 25, right? And for some reason, I had the moving average on here when I sent this out. And then here's the premium, very high heading into Tuesday morning. So we knew that. That $1.54 was all over the place. This actually ended up getting filled around $1.70. And then we did spreads too. And even the spread got filled much better than it was supposed to. Because that's, it just we happened to hit that mid-morning when everything was going crazy. But that's how I put all this together. That's how you get the cone. That's how you get the buy zone. It's, and then of course, now we got to put the option part together. So let's go ahead and do that now. So back to the trade. So back to the scan on Hub. And as you can see, I just have price only. Down here at the bottom, I have an option tab. It's right down here. So if I click on options, it's going to open up those options for whatever you're dealing with. Now, notice all my options are down here. If I want to make this part of the screen more of the overall screen, I'm going to click right here on this line, and I'm going to click and drag up. And when I drag up, it opens up the options chain to be greater. See, click and drag, and I'm going to drag it up. And there's my option chain, and you can make the chart bigger or you can make the option chain bigger. Now, what options were we dealing with? We were not dealing with the March options. There's March, April, May. There's May 15th. So if I go to May 15th, click on the drop down arrow, it's going to bring up the May 15th options. And in this case, you remember, what were we looking at? We were looking at the 25s, the 25 strike. Well, Hub, right, when you use the default settings, it only gives you 6 option strikes. So we got to come up here, folks. Up here on this line, it says options. You're going to see another line. It says, let me blow this up for everybody. Options. Then I can turn the calls and puts on and off. Monthly, weeklies can go on and off. Here's the number of strikes. I can open this up to be a much greater version than 6. I can do 12, 18, 24. I can do all. If you click on all, it starts over again. It starts with the options that expire this week. So you got to collapse that window, go back to find the option strike you're interested in, your expiration date, and open that window. And now the Mays are open, and now I can look at the Mays. And right there is the May 25s. All right, there's the 25 puts. Right now they're $1.34 by $1.50 as of last print. If I'm going to be a seller, notice if I want to sell the put, I'm going to click in the bid. And that's the red means I'm selling. The green means I'm buying. Okay, so I'm going to click on the red. That's going to put a -1 out there, and you can change that to as many contracts as you want. But that's the -1. And then what it does is it drops this in, and it will show you, in this case, it's going to show you what is needed, what your max risk is if it drops to 0, what your max profit is. And that max profit is based on the minimum, the middle between the bid and the offer. Okay. Now let me say this too. It does pertain to cash flow mastery, but it also pertains to the software as a total, right? Hub is right now working on very quickly the ability for you to change that number to whatever you want. All right. That number is going to be changeable because they were using it on a tradable, more on a what it's trading at now, and not as much as, oh, what do you do after you put that trade in and save that trade? It needs to be saved at a specified price. So they're going to allow you to change that to a specified price. That's going to come real soon. All right, so now I've looked at options. Now I've looked at details. And this details are what? Sell to open, the 25 put with the May expiration, 72 days to expiration, and then I can change my quantity. That's the area you're going to be able to change price. There's your net credit. Shows your risk and your profit. Great. Where's my risk graph at? Again, risk curve is going to be just above the detailed information. So if I click on risk curve, it's going to open up the risk curve for me. I'm going to bring this down first, open up the risk curve, and notice what happens. Now the risk curve is taking up half of the portion of the trade. I'm going to collapse this in right here on the left-hand side, and it opens up the chart a little bit more. So here's what we see. I see the chart. Notice if I click and drag the chart over a little bit more, I can see the chart. But I can see what my maximum profit potential is. I can see that risk curve as it goes down. All of that's right there. Okay. You see the dotted line? All right. You know what that dotted line represents? That represents break even at expiration. And then if you look where that dotted line is, it also shows you where the break evens are going forward in time, right? So where are we at right now? We're up here on the curve. This is the break even today, right? This is the break even of the stock price at expiration. So they're all out there for you. Okay. 72, 56, 36, 17, 0. Those are the days to expiration as confirmed by the color codes that you see there. Trying to blow this up. It's not letting me. Let me try it down here. Here we go. There's your days to expiration, and there's your color codes. Now, I can turn these on and off, okay? And I can look at them by hitting them. I can look at values, okay? The value today, the value at expiration. So there's a lot you can do with this. So there you go. So now I'm gonna bring this. Yeah, I've got this debt where I want it. So what we've seen now is we've seen how to manipulate the chart. We've seen how to add an option strike in, how to create a risk curve, how to move that risk curve around. You just click and drag. I can drag the curve up. I can drag the curve down. Okay. I can drag it left and right. I can open it and close it, meaning I can open the window more and close the window by two things. Number one, I can come over here where the price chart of the stock is. And if I click on a price and I drag up, it will actually move the price window out. If I drag in, it moves the price window in. All right. A lot of manipulation you can do here on the fly with the software. Okay. So that is the manipulating an individual stock option that you search on and find on your own. Okay, probability cone, check. Let's talk about the scan. So the scan, if you were to go in and you were to look at the sell put scan, you could click on the scan description and John, it's going to give you all the answers for the questions that you're currently asking. What does the scan do? How does it work step by step? If it has earnings built into it, which this one does not, it would have some information on the scan with earnings. But you'll also see key parameters on what this does as well. Okay. So as we move forward in time, John, all those other expiration dates come in, because if I have my default settings looking at 30 to 90 days, or really 20 to 60 when you're just looking at the trading days to expiration, then it's going to look for the best setups just in those areas. All right. When we get to May, it's going to be looking at July. When we get to July, it's going to be looking at plus or minus in September. It's a constant moving. It moves constantly. Right. So that's the sell put scan, and that's the description. If you go into the area that shows the scan itself, the very top area, I wanted to take a quick snapshot of it and blow it up so you can see all the portions of the scan before we go in and play around with it. So you've got filters. The first filter I showed you was the stock list filter, right? You can go in here and you can manipulate the amount of data that comes out by tweaking the stock list, by using a smaller stock list rather than the all optional stock list. Okay. The second thing we're going to look at over on the left-hand side, you've got the last date, and then I have check mark use latest scan time. Now, once they're talking about end of month, but once this goes into real time refresh to send data, then this will be using real time data. It won't be using day before, because this scan operates on close of prior day. But what it will be doing is it will be operating on close of current close, which is the most up-to-date data that they're going to get. All right. So other things you can look at is you can add in an IV ranking. You can add in a probability of profit ranking. You can add in stock probability of profit over stock close. You can look at calendar days to expiration. There you go, John. If you want to add to the filter, put whatever expiration dates in you want. Put credit close, quote slippage. You can look at break even over close. You can look at IV as percentage of a range. There's a lot of different ways that you can manipulate this trade. All right. So there you go. All right. Now, once we get into the actual scan results that come below, this is how I scan. This is the way the default setup is set up for me, is that, and then we can go in and manipulate from here. But I'm looking at low slippage. All right. Quote percentage of slippage, I like to see that below 10%. Right. High IV, and that's an IV number itself, but we look at the percentage of that IV. But this is just showing you the IV on that particular option, right? So high IV is also on the scan. Probability's got to be greater than 90%, and the secret sauce is something we call the probability of profit, and that is going to be multiplied by the credit divided by the close. Right. So it's a mathematical formula that helps us look at what is the most important. What are the ones stacking up to the top right now? Right. So there you go. All right. So let's go ahead and let's look at at some trades. Let's do a case study today, if there's one that can be provided. So in order to do that, I'm going to pop back over to the hub area. And I am going to go to the scanners. So I'm going to go right up here, put my mouse on the scanners, and I'm going to click. And I'm going to go find the sell put scan. And I'm going to click on it. And it's going to open up all that information that I'm looking at here now. I want you to notice something. All right. There's a lot on here. How many scans do we have today? I'm not used to seeing this many. But it's going to have more than one. It may have more than one of the same stock in here. Jay, you're in here. I know you're busy, but here's what I want you to do: write this down, or get an email. Add this to the job jar. I'm already thinking right away. We need another another area right here. Single stock. So if I punch in Apple, that it gives me just the Apple trades if they're available. If I punch in Microsoft, it gives me just the Microsoft trade. That's something I really like to see on a day. You know why we're having so many of these things, guys? Because what happened yesterday? All hell broke loose. The sky was falling. I heard people saying to me, "Oh boy, we're going to war." And that's what, oh boy, we're going to war. You know, get the bunker started, you know, dig the hole in the ground. I mean, there were some people that were saying that. And so that equates to a lot, a huge. What do you say, Jay?
I'm sorry, on your question about adding to the job jar, the single stock, where do you want that?
Yeah, I mean, it can go anywhere, but I think up here, there's some real estate right here next to stock. Okay, we can put in, you know, stock symbol. And so you put stock symbol in, it just gives
on all scanners besides just sell puts?
Yeah, probably every single one of them.
You got it. You got it. Okay.
Thank you, sir. You can go dark again if you want. See how fast he left? All right. So anyway, here's what we got. So I have, and the reason I showed you that is because we've got a lot of scans on here. I mean, I just keep going and going and going. We have 199. I think that's where we run to 199. All right. So immediately, I know that's too many. So what I do is when I look at probability of put of profit times put credit over to close, see if I have that. Okay. So here's what I can do. I can go in and immediately I can reduce that list right here. What about the penny and weeklies? And click apply. And that should just give us our penny and weekly lists. But it looks like we're running, I might have that default to penny and weekly only. All right, let's go to S&P 100. There we go. Now I've dropped it down. What do I drop it down to? Still a lot of trades, 84. Okay, so I've cut it more than in half. Now what you're going to see is over on the left-hand side, you can see where it came out in the ranks. So the number one stock in the S&P 100 is Charter Communications, but it was number 3 in the ranks. So that means there were 2 other stocks ahead of it that are not in this list, and that's why the rank is the way it is. All right, so that's a way to do it. What about, let's see if we can go in here, and are there any IVs? So your probability profit. What if your probability profit was greater than 95%? I wonder if what that does. Boom. Oh, I have some 95%ers. Yeah, I only have 44 now. So you see how you can change. You can play around with the list. Okay, let me get that out. How about probability of profit times the put credit over to stock close? That's the value I use to rank. I like that to be at a 2 or better. So equal to. Let's change that to is greater than 2. Click apply. Now we have 7. Do you see what I just did? I'm using the S&P 100, and I'm using probability profit greater than the over the credit stock close. Now I've got Charter still there, Adobe, Bank of America, Wells Fargo, RTX, Oracle, by the way, Oracle is one of our trades in the last couple of weeks. It's still expensive, but then I can go in here and I can look at, some of these stocks, and I see some of these stocks are still expensive, right? So maybe I want a cheaper stock. Well, if I want a cheaper stock, I got to go outside the S&P 100. Maybe I got to go to the S&P 500. All right, S&P 500 is going to open this up. And all of a sudden now, out of the S&P 500, I've got 99 potentials. That's another one we got to put in there too, Jay, if you're listening, is we need to put an area that says stock price is equal to, greater than, less than. Thank you, sir. Add that to the job jar too, because stock price has a lot to do with whether someone who is doing a cash secured account may want to take that trade or not. So there we go. All right, so I'm looking along here, and I'm seeing. Let's see here. What am I doing? I'm seeing a lot of expensive stocks. You know why? Because there's a lot of expensive stocks in the S&P 500. There's Occidental Petroleum. You know what direction that's been going into the last couple weeks, months. Coca-Cola. Coca-Cola is a $79 stock. Who would have thought? This is because I haven't seen Coca-Cola in a while. Safety stock, though, for sure. So in order to get to the really cheap stocks, you really got to come out of the S&P 500 and you got to go into those pennies, those penny weekly stocks. And that's going to bring in some of that stuff that is cheap. When I look down here, look at what's cheap. SoFi Technologies. That's one I was looking at early this morning. I was looking at SoFi. So SoFi is number 10 on the big list. All right, number 10 on the big list. And what is it telling me? It's an $18.61 stock. And it's looking at, selling a 13 put, getting 44 cents for it right now. This is the May, and then so it's putting your break even at 12.5. Where's that put credit over to close is above 2. That's good. 92% probability. Okay. If you like what you see here, if you see something you like, you're going to click on it. When you click on it, it's going to open everything up the way you normally have it before in your scans. All right. I'm going to move that out of the way. So here is SoFi. SoFi has had an interesting move to it here. Its high coming into 2026 was close to 30. It's come down close to 15. It's got a little bit of a reaction right here. But what's the volatility doing? So I'm going to have to, now with the scan, IV doesn't just pop up automatically. You're going to have to click on the IV scan as part of your favorites over here, and it's going to pop up. And you can see my IVs on the higher side than the low side. Look how low it was at one time when this stock was doing absolutely nothing, hanging out here in the high 20s during pretty much the entire month of December. IV dropped all the way down from, it was as high as 80, 85 down into around 50. It's since then recovered up to the mid 70s. Perfect. So it's expensive. It's expensive options. All right. What am I looking at doing here? Let's open it up a little bit more. Let's take a look. Selling the put. It's saying $44. But what's that bid and offer right now? That's not bad. Look at this, 43 by 45. That's as good as it's almost as good as it gets, folks. There you go. You know what I'm going to do? I'm going to take a little picture of this. I'm going to take a picture of it because I want to make this our scan of the day. I want this to be our trade of the day. Now, I like it at the 43-cent level. So I'm going to go in here and I am going to create a little trade for us. Hang tight here for a moment with me because, I've got to put all this together. Oh, we'll do it for 44 cents since that's the mid price. Okay. Sell to open. And this is SOFI, May 15, 2026. And this is the widen this out a little bit. Oh, $13 put. Limit price. And we'll make this a good GTC order too. Price 0.44 cents. GTC order. All right. Now, you're not seeing me type this in because I'm just setting up the image right now. I'm going to show you exactly how I put this in. I think I did this last time with everybody. So here's a trade. Okay, it looks like I've got that centered. I've got that ready to go. Let me make that green so that it's poppy. Got to make that poppy so everybody sees that. Okay, perfect. So we'll go. I'm going to name this image. I'm going to call it the SoFi put. SoFi put. All right, perfect. All right, so in the trade detail, what I'm going to do is you already got this. So you guys are already getting this. So let's type in SoFi Technologies. Oh yeah, it's coming down. That's good because that's it means it's coming down. That means it's that put option might have a chance to get filled. So SoFi Technologies. Maybe I'll change it. Maybe I won't. We'll look and see what it's doing right now. May 15. Selling the puts, selling the 13 put. There it is, 38 cents. We want 44. I'm gonna have to put that in as a good till cancel order because that's what. That all the scans came up, said 44 is the right price. So we're not getting filled on this one right away, but it's been coming down. It's come down a good bit off of its highs. So we'll see if that happens. So what I'm doing is I'm going to go into our cash flow mastery. I am going to add this trade to our cash flow mastery group. So what do? I find the cash flow mastery course. This is going to be a short put. This is SOFI, and I'm looking at the May 15th, $13 put, 44-cent credit, cash flow mastery, case study for March 4th, 2026, SOFI. Okay. Let me preview that. This is just me sending the alert to you. This doesn't mean we're getting filled. Okay, there's the little piece I put together. It explains more of the details. If I really wanted to, I could throw the entire chart in there with maybe that might make more sense. Let me see. Let me grab that trade again. That's not the trade. That's it right there. So if I kept this exactly the way it was. This is usually the way I set this up is, I'll take a look at this and then I'll add in some little features where my buy zone is. In this case, it's 13. Okay, let me grab this. I'm just going to do a little bit of a switcheroo here. There, that's better. All right, let me save this as the SoFi short put. Now let me show you what I did. So in trade preview, I'm going to change that. It's going to look like this now. Now it has the entire thing that we just put together. All right, I'm going to confirm and send this. Again, it is a credit limit 44 cents. This is a good till canceled. Did I put good till canceled in here? I did. GTC order. Confirm and send. That's actually going to show up in your email. And it's going to show up on the dashboard. So there we go. All right. Moving on. Now I want to talk a little bit about as we go through here, I want to talk about what happens when stock drops against us. Okay, there's a couple of things we can do. I'm going to share one of them with you, and we'll be able to see this in class because it's going to happen before we're done. Because this is week 2. By the time we get to week number 4, we'll be in that third week, and we'll be able to review this. But I want to give you some talking points for this particular part of the session. Before I do, I just want to bring back up. There we go. Some Q&A here. All right. Any guidance on what is cheap, lower price point stock? There isn't, Adam. It's I mean, the rankings come up as a percentage. Remember, it's a percentage. The stock price is part of the percentage. So if I get a put credit to close over the stock price, it's not looking at the price of stock. It's looking at the percentages of the put, the IV, probability, stock price. I'm saying for you as a trader, you might want to go with a lower price stock if you don't have, if you're working with a smaller account. But next week, I'm going to show you how to completely eliminate that. Today, it's just about short puts. Okay. Moving along here. Yep. Don't chase the trades. All right. Exactly. Absolutely. I'm not a trade chaser. All right. And that's a good point, and I'm glad you brought that up. Not only to say that maybe as a confirmation, I say that to myself a lot, but saying it to the community is something as well. So, what happens if stock price drops? It does happen from time to time. I actually had one that I'm going to share with you in a moment. But if a stock price drops, the put option could be, could go up in value. If it goes into money, then that stock could be assigned to you. You could end up with long stock the next business day after expiration, or maybe even before. So at that case, you have to purchase the stock and exit the trade. If that's the case, is there anything else you could do with the stock? All right. I'm not going to use Tesla as an example. I don't know why I put that in. It was TTD I wanted to look at. So that's what we're going to look at. So here's a trade that I put out at the beginning of the year. It was the 12th of December, and it was with the trade desk. The trade desk TTD had dropped quite a bit and actually looked like a value buy somewhere around the $30 range. Okay, at the $30 range, I'm going to blow this up so everybody can see this. But we were looking at selling the 30 put and bringing in a 119. Ended up getting filled at and above $1.30. But as you can see here, this one was a stock that was trading up here near 50. Then it came down to around 37. 30 was still 20% off of 37, and yet it hit that and then some. So, when you look at the buy zone, which was 30, and then you look at what happened afterwards. All right, here's the trade desk coming into today, $25.41. If you hold a 30 put and you got $1.25 or $1.30 for it, it's worth a minimum of $5. If it's at 25, that 30 put's worth $5 on expiration day. So where's it at right now? Let's look and see. Let's look at real-time quotes, because this, I'm telling you, you got to realize this will happen to you. Happens to me once or twice a year. TTD. And this was a cheap stock too. This was not a $300 stock. There's Trade Desk. Look at what Trade Desk has done. 9:35 in the morning, 24.86. By 9:55, it was 25.53. Then it came back down. Then it went up, 25.43. Now it's at 24.93. This thing just has been trading all over the place. The options. All right, let's see what the options are going for. Now, these are the March options. They expire on March the 20th. They expire in 2 weeks. The 25 puts, not the calls. The 25 puts. Nope, not the 25 puts. The 30 puts. Because I sold the 25 puts. Here's 30 puts. Okay, here we go. $5.30 right now. So if I sold these for $1.30, and now they're $5.30, I have a $4 open position loss on this. Okay, 2 weeks, 2.5 weeks to expiration, but still, it's going to be hard pressed to see this above 30 in the next couple weeks. So I hang on to it as we get closer and closer to expiration, because then we suck out as much time premium as we can before either I get assigned or make an adjustment. So what can I do? What can I do with this trade? All right. I can do one of two things. I can do what's called the roll, or I call it the down and out. The down and out is where I buy back the short put that the put I'm short, and I sell a new put with a further out expiration. That's being rolling down and rolling out. All right, the down and out means you go down to the strike, the closer strike to where it is. That means you might even go, a little further out of the money, but then you go out in time. You might have to go out in time on, maybe that 90 day, 60, 90 day area. So let's just right now, let's put ourselves in the position that we may have to do that with Trade Desk. So let's look at what the down and out might be for us right now. So here's what we do. We're going to write down $5.30. Okay, $5.30. Now, you know what else you got to do? Really, the number you got to think about is, how much am I down? I'm really down about $4 on this trade. So what I got to do is I got to get rid of this, and then I got to buy something back. And I need to be able to do it for a debit. All right. I got to do it for $4 or better. I need to sell something for $4 or better. And then that puts me at break even if everything kind of slides sideways or maybe it goes down a little bit. That's the down and out. So let's go look at what a down and out might look like. So I'm going to go look at the May options on Trade Desk. Look at the May 25s. These are at the monies. So the May 25s are $3.20. I got to go further out, or I'm locking in a smaller loss. But if I go further out, what's the next one? June. Okay, $3.65. I'm getting close. July. I may have to go out 135 days. There we go. Now we're talking about something that if the Trade Desk is out at or below that number, that 25, it's right at the money. I might be able to get in here and see what looking at the bids and the offers on this trade. Okay, so if I were to do this trade, I would have to, the bids and offers, the bid's 385, the offer's 4, I'd have to be part of the offer. And so I would put together a trade where I could do it as a diagonal trade with some brokers where we buy to close the put that we're already short, and then I would sell to open the new put. So Taffy, think of it this way. You close up your trade for a loss, and you can see what that loss is. And if you had a $4 loss on that trade, and you want to try to recover from that trade, you then go over and you can open a trade with Trade Desk with a further out of the money put, and you're going to sell it for $4 or more. And all of a sudden now you're putting on a way of recouping the loss that you had. Okay, that's one thing you could do. The second thing we could do is something that's referred to as the wheel. Okay, the wheel is where you take the stock, you let the stock assign. Now, if you sell a put at 30, that means you're buying the stock at 30. Even though it's at 25, you're being forced to buy it at 30. That's the obligation. So you'd already be 5 points down on the stock. What if you did a covered call? You could do an at the money to an out of the money covered call. Well, let's look at how that would look. All right, so we're going to look at TTD. And in this case, let's look at the call options. And I'm going to look at the call options for May first. So the call options for May, well, the 25 calls 338. How about the call options for June? 390. So we're pretty close to 4 right there. Okay, pretty close to 4 right there. So this could be a situation where we could just take the stock. And if we sold, by the way, if I own this at $3 at $1.30, if I own that stock at $1.30 and it gets put to me, then if it's put to me at 30 and the stock's at 25 and my break even was $1.30 minus 30, so you're bringing $1.30 to buy it at $30. So I really own it at $28.70. So if I take that 370, that's my loss. If I'm above 370, and this says 390, I could own the stock at $30. I could sell the 25 call for $3.90. And if it gets called away from me, now I'm out of it. And I made some change, right? So those are two different ways that you could set that up. And we just showed how to do that with the Hub Options Broker. Now, what I'm going to do is I'm actually going to do that with you because I typically do these. I will make adjustments the Wednesday, that middle of the week, like 2 days before expiration. I take a look at it. If it's in the money, I'm performing the adjustment. We're going to perform the adjustment live here, and you're going to get to see it. So you'll get to see exactly how that happens, and you'll be able to better understand that as well. All right. So this is the point where, if we take a look at where we are right now, the adjustments, every once in a while, high probability trade is going to fail. It's what you do with it determines your outcome. If you love the stock at the new price, take the stock, maybe sell at the money, out of money options for continued premium. If you're not ready to take the stock, you could roll the position further out, creating what's called a calendar spread, right, as of that. So let's go through all the questions and see what we got going on here. I'm going to back up a little bit. So we stopped with Adam without chasing trades. All right, so on the SoFi trade, let me bring this one up. I'm going to highlight this trade. So on SOFI, I see it says max loss 1256 and math profit 44. What does that really mean? Is that really a win? All right, I need layman's explanation. Taffy. First of all, the stock, the 1244 is if the stock goes from $18 and change. All right, let me bring up SoFi on the screen right now. It's at $18.63 right now. We're not even anywhere near $12.44, which is $12.44. Is that right? Did I say that right? 1256, excuse me. So 1256 is what? So let's talk about some numbers for a moment. If you're selling the 13 put, that means that you are taking the stock at 13. Okay? What does max loss mean? That means if SoFi Technologies goes to zero, okay? If SoFi Technologies goes to zero in the next 2 months, what is the probability that you believe SoFi is going to go to zero by the middle of May? They got money. They might not be spending it right. They might be in the wrong side of a trend right now. The implied volatility is suggesting that there's going to be some big ranges on this stock for continue. But do you think zero is one of those ranges? Because if you do, then you do not take this trade. Okay? If you believe zero is where this is going in 2 months, you don't take the trade. All right? Here's a 1-year chart of SoFi. Okay, by the way, last year it was below 10. Okay, and then you see here this year it went up to 32.31. It's about a 50% retracement from the low to the high to where we're currently at. This is not an Enron, right? This is not a Bear Stearns. This is not a Lehman Brothers. To this point, it's not. And even if there's a 99.9% probability that it won't go to zero, there's always that 0.001 that it will. You have to keep that in mind. So the question that I ask myself is this different than buying the stock? Well, if you bought the stock right now, if you thought SoFi was a buy right now, you'd be spending $1,800 on the stock, $1,868. The position that I put to you only cost you $1,256 for 100 shares of stock, and you're getting paid. You're getting paid to buy it at 13. So it's the probability that we're factoring in, along with, that max loss, which is if it goes to zero. All right. So that's it's a great question. I'm glad you asked it. Don't feel bad for asking a question like that. That's a good question to ask. All right. So the win is that it stays above 13 in the next 2 months. Then you take the win, and then we do it again. And we have all these stocks we can do this with where we're down here. We're, stocks up here, we're down here. Why can't you do this with just any stock? That's another good question. Well, why can't I do that with any stock that I want? You can, but the problem you're going to run into is that with the tens of thousands, if not more than that, of option strikes and option expirations up and down the line, how do you know which one's the best one to pick? That's where my scans come in play. Because although my scan doesn't guarantee a win, what it does is it goes through those hundreds of thousands of possibilities, and it will rank the ones that it feels has the best juice, the best premium they're going to pay me to buy a stock at well below market price, and the highest probability that is going to be on our side. Okay, so here I want to leave you with another one. So SOXL, all right, that's one we just put on yesterday. That's the semiconductor index right now. Look at what this thing did last week. All right, it was up here in the 70s, dropped all the way down to 50. That was at 2 a.m. this morning. We were in this trade right here, right around 53. We were getting into this because it came up on the radar. We placed that trade, and yeah, we suffered at 2 a.m., but we didn't know that. I was sleeping at 2 a.m. Woke up and we got a little bit of respite. But here's the thing. It's not the stock. I mean, we are put ourselves to buy this ETF at $25 a share. That's half the price it is right now. Right? Let's look at those option prices one more time. All right, remember it was the May puts, the May 25 puts. I want to show you the option chart this time. Here's that May 25 put. And down here, I'm going to add it to the watch list, to my watch list. So now what I'm going to do, let me put this over here for a second. I want to bring up my watch list. Oh, here it is. I got my watch list now. Watch list. Just make sure I got the right piece up. There it is. Okay. This is the important part. That option. Look at that option. That put option was trading in the 110s, 120s, dipped down to $1, right? Where did we sell it? 170. I mean, we topped, we were right in this area, 150 or better is what we were looking for. And between, well, it didn't even go out till after 10:30. 10:30 went out, it was 162, went as high as I think 180. This is a close. This is a closing chart. This doesn't show the spikes that happen. But if we looked at the closing chart, and this went out 10:30, you had 10:30, you had 11:10, 11:40. There was an hour that this was actually available. And 11:40. It might have been available at 1 o'clock. There might be a spike in here that I'm not seeing. There was a lot of volume that kicked in on this position. So there you go. And there's where it is now, $1.24. So it's down 24 cents. And so again, what are we doing? We are selling what I like to call junk. Consider yourself, you're in a junkyard right now, and we're selling junk. Every once in a while, we're going to sell some junk that's not real junk. A rarity that some junk's actually going to be worth something. But we're basically selling junk. We're junkyard salesmen. And that's what we're doing. We're selling junk to whoever wants to buy it, those out-of-the-money put buyers. And we're getting paid to sell that junk.